Let's have some currency conversation now with Uchenna Minnis, FX trader and managing partner at Blufx Nigeria. Good evening. Good to see you. Just outside there, Uchenna.
Thank you, Bolton. Thank you for having me.
Thank you. How tough is it for the dollar this week, and what are the key drivers pulling the grain back?
I think it's quite obvious for investors now as market participants as they try to price in that there is not going to be that speedy recovery that has been propagated by mainstream media as a result of or coming out of COVID. And that in itself is saying that there's going to be aggressive monetary policy going forward in the near to medium term from the central bank, should I say, as a result of trying to manage this risk. And that is what we're seeing in the US dollar. The 10-year, US 10-year treasury bills have sort of started trading at that very low point of 10-year low period price level. And that in itself is what we are seeing. That is transferred, that ripple effect has been transferred into gold, and we can see gold surging to an 11-year high of $1,900 per ounce.
There were certain talks this week around whether the euro will become a reserve currency. That reserve, briefly, is that a possibility?
You need to understand that pricing and trying to sort for safe haven in terms of asset classes from a market participant perspective is all about sentiment and all about healthiness of that particular asset. As it is right now, compared to the US, the Europe is actually doing so well as regards to COVID. So when investors are seeing that that region is faring well, I think they've just you just see that capital inflow into that space. And when foreign investors are trying to source for turn their local currency to euro, that's where you see that bid in the euro currency. So yes, in a makeshift sort of way, you can have the euro being a safe haven compared to the US dollar, given the US is really now still having another sort of significant wave of COVID-19.
I agree with you. It looks like the Europeans seem to have gotten their hands on their hang on the pandemic, at least for now. The US is now looking like the epicenter. The number of deaths are well above 114,000 as at this morning. Yeah. So which of the currencies lead the carry trade for the week?
Well, you can see that significant surge in safe haven currencies throughout this week, giving investors time to be more cautious and trying to understand that things are not exactly as they have priced in since central bank have started to, and government fiscal policy have been started to be incorporated into the market. You can see the safe haven currency like the Japanese yen, the Swiss franc, trying to sort of work around that space. You can also see some bit of sentiment around the New Zealand dollars and the Australian dollar, the Orthopedians. They're also sort of creating that sort of providing yield in that returns from on a week-to-week basis. But generally speaking, I think what we are looking at right now is we might be getting to that point, that turning point, as this significant surge in precious metal is sort of highlighting that there is something underneath that is going wrong in terms of how market participants have perceived risks from a financial market perspective. So if this continue into next week, then we might start to see a significant risk of sentiment, and we can see high yielding assets facing downside pressure going into next week.
What about frontier currencies, Uchenna? What's the playbook around the South African rand, the Egyptian pound, and the weakening we saw this week in the Kenyan shillings?
So I'll start with the South African rand. You know, the South African rand, as serves as like a sort of anchor market. The South African economy sounds like an anchor market for emerging and frontier space. And whenever investors, market participants from a global perspective start to price in some sort of risk of sentiment, we see that just translate into the South African market. And that's what we're starting to see. The Kenyan shillings, I can think that's more like a domestic variable as the administration has started to ease down their lockdown, should I say, stance. And given this strain in supply chain dynamics, you can see manufacturing industries and the economy trying to source out trying to get out that funds from the foreign investment in terms into the economy, and that pressure is being seen in the Kenyan shilling as local investors try to change their Kenyan shilling to access US dollars so that they can import things into the economy, sort of to mend the gap in terms of the deficit that is going on with their domestic supply chain until that starts to pick up, given the fact that they've been on significant lockdown for a period. And that's what we're seeing in that the Kenyan shilling trading lower.
Uchenna Minnis, Blufx Nigeria. Let's continue the conversation from here next week. Thank you very much.
Thank you for having me, Boston.